In the name of Allah, the most beneficent, the most merciful. I am Muhammad Asif Chaudhary, and these days our lectures are going on the PhD thesis and how we can present or defend our thesis. First of all, we discuss the introduction chapter, and now today I will start with the conceptual framework and carry on it up to the literature review. As in the previous lecture, I was explaining regarding the conceptual framework. My conceptual framework was the corporate governance attributes, which attributes I have taken as a independent variable are the board gender diversity, board independence, institutional ownership, and audit quality. Now, first of all, I check the impact of these independent variables on the organization performance. The novelty in this research is that most of the people check the organization performance through only the financial performance. But in this research, both the performance are checked, that is the financial performance and social performance. So total become the organization performance, not only financial performance but the social performance. And the control variables are the firm size, firm age, and leverage. That is the simple relationship which are already checked in most of the studies. But the novelty in this study is that I checked the relationship of these independent variable with the corporate tax avoidance. What is the mediating role of corporate tax avoidance between these independent variables and the dependent variable which the corporate tax avoidance mediate, and to make it most novel, I check the moderating role of family control, because most of the firms in the Pakistan are family oriented firms and they family dominated, so which the family directors explain or give directions that are abided by the management. So I check which the effect of the governance and moderation of family control affect the performance by this moderation and mediation of the corporate tax avoidance. Now, the conceptual framework, as you know, that corporate governance attribute with corporate effective tax rate as a mediator, return of asset, return of equity, and ESG are as the dependent variable, and family control moderate the governance performance relationship. Tax avoidance mediate and family control moderate the, which includes the board gender diversity, board independence, institutional ownership, and the audit quality. I will start my chapter 2 of literature review with section A, that the corporate governance and the performance, and what the corporate governance impacted the performance, which are already mostly studied in the world and Pakistan. That is, the corporate governance refer to the system of rules and practices and mechanism through which firm are directed and controlled. So basically corporate governance is that mechanism which direct the management and control the management. That is the corporate governance. And what is the attribute of board gender diversity? That is the one attribute of corporate governance is board gender diversity. That is, discussion was the female directors improve ethics because women are more logical, so they improve the ethics, transparency, and monitoring. diverse board reduce the aggressive tax behaviors. So we want to check what is the aggressive tax behavior and what are the tax evasion or avoidance, what impacted by that attribute of the corporate governance, that is board gender diversity on the tax avoidance. So first of all, that is the diverse board reduce aggressiveness because they want transparency, they want ethics, therefore they did not like to avoid the taxes. It's the nature of a woman. And if we go on the empirical findings, that positive impact on the return of assets mean the diverse board have a good effect on the performance of the organizations, and mixed evidence in developing economy, but in developed economy it has a positive, because in developing economy, because it may happen that the presence of women in a board may be only it will not the fully presence, but only the use as a proxy. What is the board independence? As per discussion, independent director reduce the agency conflict. Agency conflict that arises between the principal and agent, that reduces by the independent director, because independent director did not have any concern with the organization regarding the remunerations, and did not the permanent part of that organization. So they reduce conflict and improve the monitoring and enhance compliance. The monitoring is improved by independent director, and compliance level like the payment of taxes properly are increased by the board independence. So independent director will not prefer to avoid taxes because they have not concern that the organization should save money, but they have concern that they should be compliant by the law. In literature, a positive governance performance relationship may reduce aggressive tax planning. If there is a positive relationship between the performance and the governance relationship, then tax avoidance will be reduced. And if I talk about the institutional ownership, where the discussion institutional investors monitors the management because they have a lot of shares, they had a major share in the organization, so they monitor and reduce the managerial opportunism, because when they take the opportunity of drawing for their personal benefits, the management drawing for their personal management, the institutional ownership check, they have a check and balance, and demanded the transparency in all the things. So the last attribute is the audit quality. If we discuss regarding audit quality, the big four firms are so clean regarding, they did not give the favors, so that audit quality may reduce, or there should not be a transparency. So big four firms avoid the taxes and other things, improve the reporting quality, reduce earning manipulation, and constrain the aggressive tax behavior by the big four auditors. Now my major keyword was tax avoidance, because I was working on the tax avoidance and how it create a curiosity in my mind, that I should check why the firms avoid taxes even if they did not perform good, which firms avoid taxes, they lost their business in near future. So the firms which are paying good taxes, they survive for a long term. So the literature regarding the corporate tax avoidance was that on this earth nothing is sure except demise, and tax is narrated by the Benjamin Franklin. And Benjamin Franklin is respected by their nation, Americans, like we respect Qaid-e-Azam, and he said that nothing is sure except death and taxes. Taxes are sure, you have to pay that taxes, one thing. And that from beginning the tax by laws almost of every society has faced the trouble of tax avoidance from when the taxes start, from then the tax avoidance started. So every society face this tax avoidance issues, and tax views as a bulk cost for the organization of the company, because almost 1/3 of the profit of the company go in the form of taxes. Like in Pakistan, tax rate is 29%, and if a company earns 100 rupees, then 29 had to go for a taxes. And like some countries at 35% rate of taxes, and now if we include the super tax, then it go up to 45%. So the taxes are the bulk cost, that is almost 1/3, and for this reason business work to reduce the tax burden and avoid the taxes. uh, if I talk about the definition of the corporate tax avoidance refer to the legal strategy used to minimize the tax liabilities. It is legal but is not ethical. So the it is refer that legal strategies are like the loopholes in the laws, and like these things they use for avoidance of taxes and reduce their liability. And what is the difference between tax avoidance is a legal but not ethical? Tax evasion is illegal, it is not it is like a tax theft. For the measurement of tax avoidance, I use the proxies, the proxies that can be used as a cash effective tax rate, general effective tax rate, book tax difference. But in this research, the cash effective tax rate is used for calculation of the tax avoidance. If the tax rate will be higher, paid tax will be higher, then the tax avoidance will be low. But when the tax avoidance will be high, the tax rate will be low. These are vice versa to each other. Now the governance and tax avoidance empirical discussion shows that strong governance reduce the aggressive tax practices. If the governance will be strong, then there will not be a aggressive tax practices, there will not be a tax avoidance, tax will be paid properly. And key evidence that board independence negatively associate with tax avoidance, and audit quality constraint aggressive tax behaviors. So when the board independence and the audit quality, that will reduce the tax avoidance, that is proved from the research. Now mediating role of the tax avoidance, as for novelty of our studies that we used as the mediating of tax avoidance between the corporate governance attribute and organization performance. That is our novelty, and the argument that the governance improve performance indirectly through controlling tax behavior. If you control the tax behavior, then the organization will perform better. Logic is good governance, lower aggressive tax avoidance, and better long-term performance. In short term, you can benefit, but in long term, if you avoid the taxes, you will not get the benefit. And if you did not avoid the taxes, then you will get the benefit. It is proved from research. And findings are that cash effective tax rate partially mediate board gender diversity and institutional ownership, and strong indirect pathway for the board independence. Now moderating role of the family control, because in Pakistan most of the businesses are controlled by the single family or by the main families. Therefore the family control has a good impact on the organization performance and governance. Therefore it's also a novelty of our research. That was the research gap, that it did not check the moderating role of family control. So I checked, and the family firms are controlled by family members through the ownership or the board dominance. They control the board, and characteristics are the concentrated ownership, concentrate on a single point, and the socio emotional wealth priorities and long term orientation are missing. If I shows you the calculation of moderating role of the family control. The family control may weaken the governance effectiveness. Why? Because there is the dominating role of the family control, so the governance control reduces by the family control. And if we check the effect that both gender diversity multiplied by family control, there will be a negative board independence by family control, there will be a negative result institutional ownership, and family control there will be a negative, and audit quality by family control weak and insignificant impact on the family control. Now I will tell you about the hypothesis, which hypothesis I use and which they were check the relationship between whom the direct effect that was from the attribute of board attribute of corporate governance, that is board gender diversity, independence of the board, institutional ownership, and audit quality is directly checked with the organization performance, that are from hypothesis 1 to hypothesis 4, and where the mediation is checked by hypothesis 13 to 16, and the moderation is checked by hypothesis 21 to 24, and moderation and mediation are checked by 25 to 28 hypotheses. There are 28 hypotheses in my study which are checked. And what is the literature gap? Existing problem that limited developing country evidence. It is that studies are mostly conducted in developed country, not in the developing country. So it was the existing problem. And second one is the lack of integrated models. That model is not applied, and family firms unexplored in the previous research, and mediation and moderation rarely combined. So in this research, it is a novelty our research that we combine the mediation and moderation. Now if I conclude this chapter with the summary that governance impact the performance, no doubt governance impact the performance, it's already studied in lot of studies, and governance influence the tax behavior, that was the novelty, and tax avoidance mediate governance performance. Next is, it is our novelty of our study, and the family control moderate the governance effectiveness is also the novelty. If I talk about the references, that are the new references, and thank you very much, as I want to explain these things only for the students who want to appear in the their defense, who want to present their presentations, and are the students who are learning phase can understand all these things, and the organizations especially it will be helpful for the owners of the organization, shareholders, management, and the tax collecting authorities, and the controlling and regulatory authorities. It will be very helpful. If you like, share, subscribe, and share it, then it will reach to the policy makers, and it will give the benefit to lot of the peoples. Thank you very much. Have a nice day.